Welcome back to the Corporate Finance Academy. We are going to talk finance career paths today with a focus on the entry level. So for those just coming out of undergrad, or maybe you're very early in your career and you're thinking about a switch to finance, we're going to go through those different career paths. So we're going to talk about what those different categories of finance careers are, what those paths look like, and then we're going to do a brief overview of each of them. Reason we're doing this, it's really tough to navigate. Schools, colleges, universities do not give a great job of breaking down what the different options are. They're very focused on just a few, whether it be investment banking, CFA driven, CFP driven. And the internet is not your friend. You spend time in these Reddit forums, Reddit forums, discussions, and you don't even know who's giving you that advice on the other end. Half the time it's probably another university student who doesn't really know the answer. Okay, so this is how I would break it down. Is this perfect? Probably not. But does this give you a fairly clear picture of what those different paths are? I do think it does. I'm not going to read these to you, but we will go through them one at a time and learn a little bit more. All right, our first category here, investment banking. This is probably considered the holy grail of finance positions, career paths. You see the top companies there. You obviously have the big ones, but then you have some boutique firms which are very prestigious. The outlook's pretty stable. Go to the right side. Quick overview of the industry. Investment bankers are going to work with different companies and entities to raise capital, to buy or sell other companies. What you're going to do at the entry level is a ton of work. You work your ass off. You're going to prepare advanced financial models. You're going to help with recommendations on transactions along the way. You're going to prepare presentations, PowerPoint, pitch books, whatever you want to call it. You'll probably have some client interaction along the way, and due diligence is another piece of the job. Now, here's why people do it. You start off making often at the top companies, $150,000 a year or more. Your base is probably 80 to 100K or more. Bonuses can be pretty significant, up to maybe your total base salary, and you usually get some sort of sign-on bonus. It's really hard to get into. You need to go to a target school for the investment bank. You got to have a high GPA, and there's a difficult interview process. It's a very low percentage of people that apply or even interview that get hired. And there's limited exceptions to those criteria. In terms of certifications, they hire top MBAs. CFA maybe has some appreciation, but it's probably not going to win you the job. And it's a very competitive up or out culture. A lot of times you're going to work 80 to 100 hour work weeks. It's very competitive, and it's because there's huge potential for earnings. There's great exit opportunities when you leave the firm. If you look up here at the top, you can see a quick summary of where it stands. But in summary, really good salary, very competitive, not a lot of jobs, and a lot of hours. Management consulting. So this isn't just for finance, but it's one of the favorite paths to go in the finance world for finance undergrads. Top companies there, you'll often hear MBB, McKinsey, Bain, BCG, and then you have another tier, and then there are tons of other consultants from mom and pop shops up to slightly bigger firms. The outlook is pretty stable. What management consultants do is they give guidance and advice to companies, governments, or other entities around strategy, things to do, projects. And because it's very broad, there's a high variation of what you might do. You'll have to work with the client and your partners or your advisors to understand the problem and attack it. You're probably going to be doing modeling, brainstorming solutions to the different issues. You're going to be looking across the industry. And at the end of the day, you have to package that in a way that's valuable to your client. You have to provide that value. Early salary at the top companies, you're looking at probably $80,000 with bonuses that could a range go to the 10 to 30%, and maybe something like a $5,000 or $10,000 signing bonus. But at the top firms, you're talking all in around $100,000 or perhaps just more than that. Similar to investment banking, although probably not quite as competitive, difficult to get into. They, especially the MBB, hire from target schools, high GPAs. Now, there are more exceptions than investment banking, but still, you've got tough interviews and you really got to check most of the boxes. They certainly hire from full-time MBAs, but the other certs have limited weight, CFA, CPA. It's also a little bit of that up-or-out culture. You're talking probably 60 to 80 hours a week. It's competitive, but good potential, good exit opportunities. A lot of people end up going to work for one of the companies that they support, one of their clients. Sales and trading. This is a very big bucket. There's a lot of variation in terms of top companies. I'd say sales is probably a little more stable in terms of outlook, with trading, with a lot of the automation and software that's available, probably a bit on the downtrend. The industry is broad. You're going to work for either a mutual fund, a hedge fund, you can work for an investment bank, pension. There's the buy side, there's the sell side, and it cuts across whether it's equities, bonds, fixed income, foreign currency, commodities, derivatives. There's a lot of variation. You have the buy side, you have the sell side, you have sales, you have trading. Sales is probably at the entry level higher, a little heavier on qualitative, but you still have to have that quantitative ability, modeling. But you're going to have a little bit more selling and need a lot more polish around working with people and communication. You may even find yourself doing some selling and some cold calls. Whereas trading is a little more quantitative, definitely more quantitative. At this point, it's pretty advanced where if you're going to go into that line, you probably want to make sure you have some programming knowledge, data mining, advanced statistical capabilities. Early salary here is probably $60,000 to maybe $100,000, and the bonus can be varied. Really, this is one where, just depending on where you're working and who your employer is, it can vary quite a bit. Hiring, still difficult. Minimum GPAs. They also like to hire from target schools, as well as MBA programs. Eventually, in these worlds, you likely need a Series 7, Series 63, maybe some other. The CFA is highly valued. Again, also a stressful job. There's no U.S. market hours now. These are international markets, go around the clock. So these are longer days, 60 to 80-hour work weeks, and it's still a pretty competitive field. Commercial banking. So top companies here, JP Morgan, Bank of America, you can see the others. The outlook's pretty stable. And this is really the first one that we've hit on so far that has a little better balance across what the salary as well as the work-life balance is. You're going to provide, what commercial banks do is they provide lending and deposit services to different companies and entities. At the entry level, you're probably a credit analyst or account manager. You'll underwrite new deals. Really, that means deciding whether or not the bank lends or works with someone, and or you'll be doing monitoring of customers' clients, reviewing their information, using the bank's models to determine if it's still a good relationship or if there's any concerns to be had, manage that risk. But you also may be managing relationships with clients and doing a little selling in the form of bringing in new business or creating new accounts. The early salary, you have a little bit on the lower end here versus what you've looked at so far, but 55 to 90,000, 5 to maybe 20% bonus, maybe a sign-on. There's still a pretty quick path to $100,000 here if you play it right. Still, these firms like to get top talent. The top companies like to get top talent. GPA is important. And these companies have their target schools, but they're not necessarily the same target schools that you see in the investment banking or even the consulting world. Certifications, MBA and CFA are certainly valued, and there are some others out there that might help a bit. You can have a long career path in commercial banking. It's not necessarily something where you have to have an exit opportunity. You can climb the ladder within the company. It's a little more stable, and your work hours are going to be more reasonable, maybe somewhere in the 35 at the low end to 60 hours per week. Again, if you want to advance, you probably don't want to be working 35 hours a week, but you can find that balance if that's what you're looking for. Private equity. Now, the first thing I'll say here is there are not a lot of private equity firms that hire directly out of undergrad. They value experience first and foremost. You can see Blackstone, KKR, a couple of the big ones do hire undergrad. The outlook here is pretty stable, but again, not a lot of jobs available. What private equity firms do is they acquire businesses, they can aggregate businesses, they look to grow it into something bigger, and then they perhaps sell it, or they may even take the company public. If you're entry level, again, very limited here, but what you're going to do is not all that dissimilar from the work that you might get into investment banking, but you're going to be building advanced financial models. You can be monitoring company health, doing due diligence on the companies that you're looking at. The salary is pretty heavy. I mean, you may be in the area of 100 to 150-ish thousand a year, all in with your bonus, but that bonus component can be pretty heavy. GPA, you got to have a very high GPA. Again, limited hires. It's difficult selective interviews, only from the top schools. And certifications, what they're really looking for is experience, and particularly in the sector that they may be going after, experience in that specific industry. In the private equity space, you're still going to have pretty long work weeks, maybe 60 to 80 hours of work per week. But it's a dynamic environment. There could be a fair bit of local travel. Sometimes it could be international, but you're probably able to locate maybe even in different spots as long as you're willing to travel. Portfolio management, equity research. The top companies there probably don't surprise you, JP Morgan, Goldman Sachs. This industry probably is on a bit of a slight decline, just given the rise of the automation, index funds, software that's capable of driving a lot of what used to be done, maybe manually. What they do here is equity researchers provide guidance on investments. Portfolio managers is kind of the next step up from an equity research. They oversee a portfolio of investments. So the entry level is really equity research, and it's very heavy on modeling, forecasting of companies. You're going to monitor those companies, the industry. You're going to call into earnings reports. Portfolio management is really after entry level. So there are fewer openings. You also have to understand the sell side versus buy side dynamics. Sell side are going to be the analysts you see on CNBC, the ones providing research reports externally, right? The buy side is going to work at something like a fund, a trust, a pension, or some other company. And what they're going to do is try to make the right decisions for what that company wants to buy. So they're going to be taking in the reports that the sell side analysts generate and trying to decide what to do with them. The other thing to note is that a lot of these equity researchers actually struggle to find portfolio manager jobs just because there aren't that many of them, and people tend to stay. So there are few openings for portfolio managers. Early salary is pretty strong, 80 to 120,000 a year. Bonus can be 20 to 35% maybe, with the total full year comp in the $100,000 to $130,000 range. Hiring, again, they're pretty strict in the hiring process, minimum GPAs. They hire from target schools, difficult interviews, sometimes like a case study that you have to do. They also do obviously hire from MBA programs. CFA in this world is really the only designation that matters. CPA might help you a little bit. Full-time MBAs they hire, so that helps. But CFA is the holy grail amongst portfolio management and equity research. 60 to 80 hours a week. This is probably a little more New York concentrated or big city concentrated, wherever exchanges are. And like I mentioned with the portfolio manager dynamic, there are limited promotions. Financial planning, financial services. This is a very broad bucket. Probably one of the two or three most broad. Top companies, unless you really want to get into selling, you want to go into a company that has a good training program, paraplanning program, unless you want to do sales. Similar to some of these others, a little bit of a slight decline just given the rise of AI and quantitative, easily accessible quantitative models and tools. What they do, financial planners help individuals, maybe even small entities, with their investment planning and planning out their future and their portfolio. The entry job really depends. If you're getting a kind of a traditional planning role, you're going to be using the company software to try to plan out investments. You're going to think through what you want to do for that client, what their situation is. You could be doing cold calls, trying to drum up business. You could have client meetings. You could be doing researching different investment options, networking, selling, and there's some administrative and prep work that certainly financial planners have to do. The base here is maybe 40 to 80,000. The bonus is pretty varied. Some roles could be heavy in sales in this industry, and therefore you might have a very low base, but heavily incentivized for drumming up business. Hiring info, it's extremely varied. You can move into financial planning right out of undergrad. You could be more experienced. You could even perhaps move from a different industry. CFP here is the gold standard. CPA certainly can help because there's a big tax and estate planning component that goes along with financial planning. But CFP is what everyone strives for. Job info, hours vary drastically. The work-life balance could be good. It could be tough. You probably have to drive to different local clients. Sometimes you meet with them on their home turf, and you got a high degree of client interaction here that you're going to have to work with. Corporate finance. Now, this one might be the most varied across them all. The top companies in corporate finance are really the big companies. You can see the list there, Fortune 10, 100, 500. FLDP is Financial Leadership Development Program. A lot of these companies have it. It's really the fast track to work your way up the corporate finance ladder. I'd say Outlook is probably a little stronger here than some of the other categories. What is corporate finance? So some places will tell you that everything that we went through already is part of corporate finance, whether it be investment banking or private equity. But really, when we talk about corporate finance, we're talking about the end-to-end finance and accounting that every company has. Big companies, medium-sized companies, even small companies often have a CFO and a team of finance and accountants, which cuts across FP&A, treasury, investor relations, supply chain finance, commercial finance, risk management, corporate development. Really broad here. An entry-level job, again, because there are so many different areas, subsets, it could be heavy quantitative analysis or more modeling. Could be things a little more accounting driven, like journal entries. You could be doing reporting and consolidation. You could be forecasting out the future, reconciling counts, analyzing costs or revenue, or many different things. Salary varies. Could be 40, could be 80,000, somewhere in that range. Again, depends on where you work and where you live. The bonus, early on, entry level, you're probably not looking at much more than 15% bonus tops, probably in the 0 to 10% range. But a lot of these big companies do give you a little sign-on bonus. Often, again, the bigger public companies usually pay best. FLDP programs, 50 is probably too low, but you're probably looking more like $70,000 as an entry-level FLDP. Hiring info. Now, there are target schools in corporate finance, but they're usually specific to the company. So you're not going to find one list that cuts across all of corporate finance or FP&A. Each company has their schools they recruit at. A lot of times they hire their interns from the prior summer, and they also have these big super day events where they hire a bunch of people all in one day. Again, there's FLDP, but there's also various other entry-level ways to get into the companies. And in those ways, you might not need to have as high a GPA, but those jobs aren't on the fast track and will require to catch up a little bit. Certifications, CPA certainly helps for accounting and controllership type roles, but minimal weight on the others. Down the road, an MBA or a CPA can be helpful potentially for getting more to that CFO tier, but not necessarily a prerequisite. FLDP for fast advancement. Work hours, you're probably talking 35 to 50, 55 hours a week. Again, if you're trying to advance, you probably don't want to be on the 35 end of that spectrum. One thing to remember that occasionally these entry-level jobs can be slow in corporate finance, but it is possible to work your way up pretty fast. I think what you have to do is just get through some of those early jobs and build up those skill sets and then move quickly through your career. So that's it. We try to go as fast as we can, cover the big industry, the big categories within finance, to look at the different career paths. Hopefully this was helpful. Please subscribe if you haven't already. Like or dislike the video, and you probably have questions, comments. Leave them below, and we will do our best to answer them.